Hi everyone, Leigh Goldstein here again from 10-Minute Trades, and I want to show you this week's trade of the week. It's a double header, so let me show you what I mean. It was really two interesting events that took place. I think you'll want to see them. Sometimes during the week, the members' trade of the week winds up being the same as our trade of the week. Okay, in other words, trade of the week is the 10-Minute Trades best trade of the week or most interesting trade. And members' trade of the week is obviously the members' most interesting or most profitable trade. The JOLTS report was spectacular. I mean, it was just an amazing trade. We were up $45 before the trade, before the news was released. You could see a giant move in gold. You could also see a big move in bonds. We were trading gold, live, real money. And as I said, we were up $45 before the trade. When the trade was over, we were $1,000 in the profit. It took about 1 second. Let me show you the video. The JOLTS report, keep in mind, that's me. I'm the trading director for 10-Minute Trades. All the trades we discuss are for educational purposes. Now, like I said, the JOLTS report is a jobs type report. It takes place at 10 a.m. Eastern time. What an explosive move. That was gold. It shoots off the chart. You could see bonds were exploding off the chart. That's how fast the profit was. It was less than 6 seconds. As I said, $1,000. Let me show you one other screen, because there's an important reason why this JOLTS report moved the way that it did. They were expecting 9.775 million job openings to be created, and over 10 million.1 were created. So it was a very big difference in the amount of jobs that they thought would be created. That creates a large move in the instrument that we're trading. That's why we trade those instruments. In other words, we know that if there is what we call a large offset, an unexpected news result, we know that trading bonds or gold on that report is going to give us an outsized move, and that's what happened. But really, the trade of the week was something spectacular, surprising, and unexpected. Keep in mind here, Chicago PMI. All right. The offset, the expected news result, was a 47. That was the forecast. And it was 40.4, which is a huge negative difference in the expectation of the news. Watch what happens. Here comes the move. A tremendous explosion to the upside. That was gold. It went off the chart. It was such a big move. Now, the reason this is so fantastical and so unexpected, this is a report we weren't even trading. We have looked at Chicago PMI over the years as an event we might want to trade literally for years, and it's been completely inconsistent. When I got into the room, Chantal, one of our members who now works for us because she's a fantastic trade tester, she said, "Hey, don't forget about Chicago PMI. Let's take a look at it." And I was going to just say, forget it. I don't want to look at it. It's just a waste of time. And as I showed you here, the news offset was huge. They were expecting 47. They got 40. It created that large explosion. So Chicago PMI, it was a woulda, shoulda, coulda. Now, we don't like to talk woulda, shoulda, couldas. You know, maybe we could have traded it and made a fortune. But it was just such a gigantic, interesting move. I just wanted to show it to you so you could see and understand what causes these events to move. Now, here's what's even more interesting about Chicago PMI. You notice the clock says 9:42. That report really comes out at 9:45. People can buy the news early and get the result at 9:42. Then the real information is released at 9:45 to the rest of the public, the rest of the retail traders. So normally we would trade it, or the average retail trader would think to trade it at 9:45. Now, we do a lot of research on news trades, so we know that this report comes out at 9:42 for people on the inside. But when you have such a big move at 9:42, there's also a possibility you might get a 9:45 trade. So just for fun, we put on a sample trade at 9:45, and the market moved pretty good, pretty well at 9:45. It shoots up, and it would have been an easy, another couple of $100 easily trading gold to get some more profit. But really, it was the knowledge that it was a 942 private information trade, the knowledge of how to set up the trade. We know that Chicago PMI can move gold, and just seeing that explosive move shows you why the news can create these large outsized events on various instruments. It was very bad news, unexpectedly bad, and it caused the market to go up. Now, going up doesn't always mean good. Generally, gold and bonds go the opposite way of good or bad. In other words, if news is bad, very often gold and bonds will go up. That's exactly what happened on Chicago PMI. The market exploded up. I just thought that really has to be a trade of the week, even though we didn't make money on it. Of course, next month we will probably put a trade on with Chicago PMI. You never know what's going to happen. And just a fantastic, wild event in the trade room. And you know, if you don't come into the trade room, you'll never know about these things happening. You'll never learn how to be an appointment-based trader. So come into the trade room, and maybe next week you'll be the trade of the week. Or, as I should say, the members trade of the week. Leigh Goldstein here for 10-Minute Trades. Hope you're having a great weekend, and we'll see you in the trade room.